What if one three-digit number could cost you, or save you, up to $50,000 over your lifetime? That number is your credit score. It decides whether you get approved for an apartment, what interest rate you pay on a car or house, and whether lenders compete to give you the best deals or turn you down completely. Yet most people have no idea how it's calculated, what's hurting it, or how to reach the 800-plus range where the best rates live. In the next 8 minutes, I'm going to show you exactly how your credit score works, the 5 factors that control it, and the exact steps to build an 800-plus score, starting this week. And here's the best part. The same habits that build an 800 credit score are the same habits that build real wealth. Let's get into it. Quick disclaimer. This video is for educational and entertainment purposes only and is not financial advice. Always do your own research or consult a licensed financial advisor. Your credit score, most commonly the FICO score, is a number between 300 and 850. It's calculated by 3 major credit bureaus, Equifax, Experian, and TransUnion. Each may show a slightly different number, but they all use similar formulas. Lenders use this number to decide 2 things. Will they lend you money at all? And if so, at what interest rate? The difference between a credit score of 650 and 800 on a 30-year mortgage can easily be over $50,000 in total interest paid. Same house, same loan amount, completely different cost. Your FICO score is built from 5 factors. Understanding them is the foundation of everything. Factor 1. Payment history. 35% of your score. This is the biggest single factor. Pay every bill on time, every month. One missed payment, especially one that goes 30 days past due, can drop your score by 60 to 110 points overnight. This is the most important thing you can do. Factor 2. Credit utilization. 30% of your score. This is how much of your available credit you're using. If your credit card limit is $10,000 and your balance is $3,000, your utilization is 30%. For an 800-plus score, keep utilization below 10%. Never above 30%. And crucially, utilization is calculated at the moment it's reported, not at the end of the month. Pay your balance down before the statement closing date, not just before the due date. Factor 3, length of credit history. 15% of your score. The longer your accounts have been open, the better. This is why you should never close your oldest credit card, even if you don't use it. Keep it open, put one small recurring charge on it, and pay it off automatically every month. Factor 4, credit mix. 10% of your score. Having a mix of different account types, credit cards, installment loans, auto loans, shows lenders you can manage different kinds of credit responsibly. You don't need to take on debt just for this factor, but it explains why a diverse credit profile scores higher. Factor 5. New credit inquiries. 10% of your score. Every time you apply for a new card or loan, a hard inquiry hits your report and temporarily lowers your score by 5 to 10 points. Multiple applications in a short period signals financial stress to lenders. Space out applications by at least 6 months. Here's what the numbers actually mean in practice. 300 to 579. Poor. You'll struggle to get approved for most products, and if you do, the rates will be punishing. 580 to 669. Fair. You can get approved for some products, but you're paying above average rates. 670 to 739. Good. You're getting reasonable rates, but you're still leaving money on the table. 740 to 799. Very good. You're getting near the best rates available. 800 to 850. Exceptional. This is the range where lenders compete for your business. Best rates, best terms, instant approvals. Now the part you actually came for, how to get to 800 or above. Step 1. Never miss a payment. Set up auto pay for at least the minimum on every account. This protects your payment history, 35% of your score. even when life gets busy. Then, manually pay the full balance when you can. Step 2. Get your utilization below 10%. If your current card balance is high, pay it down aggressively before the statement closing date. That's the date the balance gets reported to the credit bureaus. Paying after the due date is too late for utilization purposes. Step 3. Request a credit limit increase. If you've had a card for 12 months or more with on-time payments, call and ask for a limit increase. If your limit doubles and your spending stays the same, your utilization rate cuts in half instantly. This is one of the fastest legal ways to boost your score. Step 4. Check your credit report for errors. 1 in 5 Americans has an error on their credit report that's dragging their score down. Go to annualcreditreport.com, the only federally authorized free report site, and check all 3 bureaus. Dispute any errors you find. This is free and can take 30 to 60 days to resolve. One more important note on utilization. Your score reflects utilization at the time each card reports to the bureaus, which is usually the statement closing date, not the payment due date. Pay your balance down before the statement closes, not just before the due date, and your reported utilization will be far lower even if you use your card heavily each month. Step 5. Become an authorized user. If a parent, spouse, or trusted family member has a card with a long history, high limit, and 0 late payments, ask them to add you as an authorized user. You inherit the positive history on that account without even needing to use the card. This can add years of positive history to your report instantly. 3 mistakes that silently destroy credit scores. Closing old accounts. It shortens your credit history and reduces your total available credit. Both hurt your score. If a card has no annual fee, keep it open forever. Applying for multiple cards at once. Every hard inquiry costs you points, and multiple applications in a short window looks desperate to lenders. 1 card at a time, minimum 6 months apart. Ignoring your credit report. Errors, fraud, and identity theft happen silently. Check your report at least once a year. A fraudulent account you didn't open could be wrecking your score right now. Your credit score isn't about impressing a bank. It's a financial tool that either works for you or costs you, depending on whether you understand it. 800 plus is achievable for almost anyone within 12 to 24 months of consistent behavior. Pay on time, keep utilization low, don't close old accounts, check for errors. Start with one action today. Set up autopay on every account you have. That single move protects the most important factor in your score, and it takes about 10 minutes. Subscribe to WealthVault for a new video every week. Next up, dividend investing. How to build a portfolio that pays you every single month, starting with less than you think. That video is right here. See you there.